Are you losing hundreds of dollars every month without even knowing it? If you're on the age pension, the November changes could mean you're entitled to more money than you're currently receiving. But here's the problem. Centrelink isn't going to call you and tell you about it. Stay with me, because in the next few minutes, I'm going to reveal exactly what's changed, how much you should be getting, and the simple steps to claim every dollar you're owed. Trust me, you don't want to miss this. Welcome back to Senior Benefits Guide. Today we're diving into something that affects thousands of Australian pensioners. And honestly, it's something that makes me frustrated with how the system works. The age pension rates have been updated in November. And while that sounds like good news, the reality is that many seniors have no idea if they're getting what they're entitled to. Centrelink sends out generic letters. The information is confusing, and before you know it, you could be missing out on hundreds or even thousands of dollars per year. So today, I'm breaking down everything you need to know about the November age pension update. The hidden entitlement Centrelink won't tell you about, and exactly how to make sure you're getting every cent you deserve. Let's get into it. First things first, let's talk about the actual payment rates that came into effect in November 2024. If you're a single pensioner, your maximum fortnightly payment has increased to approximately $1,140. For couples combined, it's now around $1,725.20 per fortnight. Now, this might seem like a small increase when you break it down per fortnight, but over the course of a year, we're talking about several hundred. The problem, many pensioners don't even realize this increase has happened, or worse, they're not receiving it because their circumstances haven't been properly assessed by Centrelink. Here's what Centrelink doesn't make clear. These maximum rates are only paid if you pass both the income test and the assets test. And this is where things get tricky because the thresholds and calculation methods are complex and most people don't fully understand how they work. Let's break down the income test first. If you're a single pensioner, you can earn up to $212 per fortnight before your pension starts to reduce. For couples, that threshold is $372 combined per fortnight. Once you go over these limits, your pension reduces by 50 for every dollar you earn above the threshold. So, if you're doing a bit of part-time work, have rental income from an investment property, or receive income from superannuation, this directly impacts how much age pension you receive. Many people don't realize that even small amounts of additional income can significantly reduce their pension payments. Now, the assets test is equally important, and this is where a lot of confusion happens. For single homeowners, if your accessible assets exceed $300,000 to $14,000, your pension starts to reduce. For single non-homeowners, that threshold is much higher at $566,000. Music. For couples who own their home, the limit is $470,000. And for non-homeowner couples, it's $722,000. Your family home is exempt from this test, but almost everything else counts. Investment properties, shares, bank accounts, vehicles, caravans, boats, and even valuable collectibles. The pension reduces by $3 per fortnight for every $1,000 of assets over these thresholds. Here's a critical point that catches many people out. Centrelink uses what's called deeming rates to assess your financial investments. This means they assume you're earning a certain rate of return on your savings and investments, regardless of what you're actually earning. As of November, the lower deeming rate is 0.25. 25%, which applies to the first $62,600 for singles or $13,800 for couples. Anything above that is deemed at the upper rate of 2.25%. So even if your bank is only paying you 0.5%, interest on your savings, Centrelink calculates as if you're earning 2.25%. This deemed income then counts toward your income test, potentially reducing your pension. Let me give you a real example. Say you're a single pensioner with $200,000 in a savings account, actually earning just 1% interest annually, which is $2,000 per year, or about $77 per fortnight. But under the deeming rules, Centrelink calculates that the first $62,600 earn 0.25%, which is about $6 per fortnight, and the remaining $137,400. Music is deemed at 2.25%, which is about $60 per fortnight. So Centrelink assumes you're earning $66 per fortnight in deemed income. This might not sound like much, but it adds up and reduces your pension payment accordingly. Now, let's talk about the additional payments and supplements that come with the age pension, because this is where many people are missing out without even knowing it. On top of your base pension, you're entitled to the pension supplement, which is currently $81, $60 per fortnight for singles and $123.20 for couples combined. This supplement includes components like the pharmaceutical allowance, utilities allowance, and GST supplement. It's automatically included in your payment, but if for some reason it's not showing up in your breakdown, you need to contact Centrelink immediately. Then there's rent assistance, which is a huge benefit if you're renting. If you're a single pensioner paying rent, you can receive up to $188.20 per fortnight in rent assistance. For couples, it's up to $176.80 combined. To qualify, you need to be paying more than a certain threshold in rent, which is currently $138.60 per fortnight for singles. Any rent you pay above that threshold is subsidized at $75 per dollar up to the maximum rate. So, if you're paying $400 per fortnight in rent, you'd receive the maximum rent assistance. The problem is, some pensioners don't realize they need to inform Centrelink when they start renting or when their rent increases, so they miss out on this payment. Energy supplement is another automatic payment that gets added to your pension. It's $14.10 per fortnight for singles and $21.20 for couples. While this might seem small, it's designed to help with rising electricity and gas costs. And over a year, that's more than $350 for singles and over $550 for couple. Now, here's something really important: the pensioner concession card. If you're on the age pension, you should automatically receive this card, and it's worth its weight in gold. This card gives you access to cheaper prescription medicines through the pharmaceutical benefit scheme, bulk billing at doctors, discounts on utility bills, council rates, public transport, and even some private businesses offer pensioner discounts. If you haven't received this card or it's expired, you need to contact Centrelink or Services Australia immediately to get it reissued. Don't assume it will automatically come to you. There's also the Commonwealth Seniors Health Card, which is different from the pensioner concession card. This is for self-funded retirees who don't qualify for the age pension but still want access to some concessions. If you're just over the threshold for the age pension, it's worth checking if you qualify for this card instead. Let's talk about the work bonus scheme, because this is a fantastic opportunity for pensioners who want to supplement their income. Under the work bonus rules, if you're of age, pension age, and receiving payments, the first $300 of your fortnightly income from work is exempt from the income test. That's $7,800 per year that you can earn without it affecting your pension. But here's the bonus. If you don't use that full $300 in a fortnight, it accumulates in a work bonus bank up to a maximum of $11,800. So if you work casually or seasonally, you can build up a buffer that protects your pension even in fortnights when you earn more. This is particularly useful for people who do occasional consulting, seasonal work, or have irregular income. Now, let's address something that trips up many pensioners' gifting rules. I understand the desire to help your children or grandchildren financially, especially with housing affordability being such a challenge, but Centrelink has strict rules about gifting, and if you breach them, it can seriously impact your pension. You're allowed to gift up to $10,000 in any financial year or $30,000 over a rolling 5-year period. Any amount you gift above these limits is still counted as your asset for 5 years from the date of the gift. So if you give your daughter $50,000 for a house deposit, Centrelink will still assess $20,000 of that as your asset, which could push you over the asset's test threshold and reduce or eliminate your pension. I've seen cases where generous grandparents lost thousands in pension payments because they weren't aware of these rules. Here's a strategy that many financial advisors recommend: funeral bonds and prepaid funerals. You can invest up to $15,500 in a funeral bond or prepaid funeral arrangement, and this amount is completely exempt from the assets test. If you're close to the assets threshold, this can be a legitimate way to reduce your accessible assets while also taking care of future funeral expenses. Just make sure you're doing this for the right reasons and not purely for pension purposes, because once the money is in a funeral bond, it can only be used for funeral expenses. Another area where people miss out is in understanding how their superannuation affects their pension. Once you reach age pension age, any superannuation you have is counted as an asset under the assets test, and the deemed income from it is assessed under the income tax. However, account-based pensions from superannuation can be structured in ways that minimize the impact on your age pension entitlement. This is where speaking to a financial advisor who specializes in retirement planning can really pay off. Let me address home ownership for a moment, because this is a big decision many older Australians face. Your principal home is exempt from the assets test. But if you're considering downsizing, you need to be very careful. Under the downsizer contribution scheme, if you sell your home and it's been your principal residence for at least 10 years, you can contribute up to $300,000 from the proceeds into your superannuation without it counting toward your contribution caps. However, this amount will then be accessible under the assets test for your age pension. There's also a home equity access scheme offered by the government, which is essentially a reverse mortgage that allows you to boost your income by borrowing against your home. The interest rates are typically lower than commercial reverse mortgages, and it can be a way to increase your cash flow without selling your home. Now, let's talk about what to do if you think you're not receiving the correct amount. First, log into your MYGV account and check your Centrelink payment summary. This will show you a detailed breakdown of how your payment was calculated, including what income and assets were assessed. If something looks wrong, perhaps they have an incorrect asset valuation, or they're missing information about your income, you need to update this immediately. You can do this online through MYGOV or by calling Centrelink. If you're confused about your entitlements or how to maximize your pension, I strongly recommend booking an appointment with a financial information service officer. This is a free service provided by the government, and these officers are specifically trained in age pension rules and retirement planning. They can review your circumstances and give you tailored advice about your entitlements. You can book an appointment by calling the Financial Information Service on 132300. Here's something really important. If your circumstances change, you must notify Centrelink within 14 days. This includes changes to your income, assets, living arrangements, relationship status, or if you go overseas. If you fail to report changes and you're overpaid, Centrelink will raise a debt against you and you'll have to pay it back. Sometimes with penalties. I've seen cases where people have accumulated debts of tens of thousands of dollars because they didn't understand their reporting obligations. On the flip side, if your circumstances change in a way that entitles you to more pension, Centrelink won't backdate the increase unless you notify them. So, if you sell an investment property and your assets drop below a threshold or your income reduces, report it straight away so you can start receiving the higher payment. If you're applying for age pension for the first time, here are some tips to make the process smoother. Start gathering your documents well before you reach age pension age. You'll need proof of identity, bank statements for all, accounts for the past 12 months, details of all assets, including property valuations, details of any income, including superannuation, and if you're in a relationship, your partner's information as well. The processing time is currently around 8 to 12 weeks, so apply well in advance of when you need the payment. You can submit your claim up to 13 weeks before you reach age pension age. If your application is rejected or you disagree with the decision Centrelink has made, don't give up. You have the right to request a review of the decision. There are 2 levels of internal review, an authorized review officer review and then an appeals officer review. If you're still not satisfied, you can take your case to the Administrative Appeals Tribunal. Many decisions are overturned on review, especially when there's been a misunderstanding about your circumstances or incorrect information has been used. One final thing I want to mention is the importance of keeping good records. Keep copies of all correspondence with Centrelink, all bank statements, all documents you submit, and notes of any phone calls, including the date, time, and the name of the person you spoke to. If there's ever a dispute or question about your payments, having this documentation can make all the difference. The age pension system in Australia is designed to provide a safety net for older Australians, but it's complex, and the responsibility is on you to ensure you're receiving what you're entitled to. Centrelink processes millions of payments and mistakes happen. Don't assume that everything is correct just because the payment is coming through. Take the time to understand the rules. Check your entitlements and ask questions when something doesn't make sense. So, there you have it. Everything you need to know about the November age pension update and how to make sure you're getting every dollar you're entitled to. Remember, this is your money. You've contributed to the system your entire working life, and you deserve to receive the full support available to you. If you found this video helpful, please hit that subscribe button and turn on notifications so you don't miss future updates on age pension and other senior benefits. I regularly post videos breaking down these complex topics into simple, actionable information. Drop a comment below and let me know if you've received your November increase or if you're facing any issues with Centrelink. I read every comment and I'll do my best to point you in the right direction. And if you know another pensioner who could benefit from this information, please share this video with them. Knowledge is power, and together we can make sure every Australian senior gets what they're entitled to. Thanks for watching, take care, and I'll see you in the next video.